Good morning, everyone. Thank you so much for listening in. Again, continuing to work some new policies or procedures here for sound. So if you have sound difficulties, immediately put that in the chat. Thank you so much, and we'll get those resolved. All right, welcome to the On Time on Target Morning Brief. Today is a Thursday, September 3rd. Big week so far as the market continuing to scream higher. A little bit of common sense coming into the market this morning, but then we had the good jobs numbers, so then things went right back up. So we shall see how today turns out. If you are catching this on replay, thank you so much for checking us out. We are a group of investors that get together in the morning. We talk about long-term investments, short-term investments. I bring material every morning as part of like a fighter pilot style brief. Folks have access to what you don't see on the replay is there's a chat room as well as a question and answer room, and that's for folks that are in a room populating that, and then I will talk to that through the hour that we are here together. So if you want to give us a shot to come into Steve or give me a shout out to Steve at ototnow.com, and we'll get you set up with a free trial. All right, on to the brief. Our mission objectives for today are to grow our money, protect our money, and live off our money. Tactically, our tactical objectives for today are to take a look at, based on some headlines of there's going to be a vaccine by November 1st, we want to take a look at what are some of the stocks that are positioned to pop based off of that news. They're called recovery stocks or vaccine stocks out there. So whatever you want to call them, we're going to talk about some names that are out there today that could be on the move up, not only today, but in that swing trade mentality of between now and November when the vaccine is supposed to come out, and I actually think it will. The question today is going to be how is volatility calculated? I could go into depth on that. I will probably not, but we shall see. If you guys have questions as I give kind of a baseline explanation, just let me know if you want more. All right, as far as our flow for the morning, we're going to go long, short, open, short, long. So what that means is we're going to take a look at the market review, not only for the U.S., but around the world of what's going on. We'll come back to the U.S. We'll talk about headline specific stuff and names that are in motion. We'll talk about our long-term investments, which are going to be American Airlines, United Airlines, Carnival Cruise Lines, AMC, the movie company. Again, 70% of the theaters are supposed to be open this weekend. And then MGM, which is we talked about yesterday, the gaming stocks. And then the leisure and travel ETF that has been obviously crushed by the COVID, and it has not recovered with the rest. So again, these are things that have largely not recovered that are now primed to recover. I'll show you those charts and I'll tell you what my pick is for all these. Once we get within 10 minutes of the open, we'll talk some short-term day trading opportunities. If you're into that, you can either take it real time with me, you can do a paper trade, or just follow along for entertainment if you want. Once the market opens, we'll get through kind of our initial day trading phase. We'll transition back long and looking at how long-term investments are going and see if there's any opportunities there to open positions or close positions, and then press on to the question of the day. As far as contingencies, contact me at Steve at OTOT Now. My staff is standing by to help you out if you have any issues getting into the room. And standard disclaimer applies. This is an educational presentation. You have to do your own due diligence before acting anything that you hear this morning. So with that, let's go ahead and get started with our first presentation up to the TD Ameritrade Think Pipes platform. So what you're seeing here is a one-year chart of the S&P 500. You see, it climbed into February, dropped off large in March, and now it's basically a large super V type recovery with everything back in the green. Yesterday, we did try to, I'm going to zoom in here a little bit to a 5-day version of this. So this is what you see in the dark blue is the past 5 days, and then the light purple there is the after hours. So this was this was Tuesday, kind of a straight up move. So Monday flat, Tuesday straight up. Yesterday started like, well, maybe we'll be in the red, maybe we'll flat, and it's like, nope, we're just going to go straight on up all day long. So here's what I'm talking about as far as the future starting to sell off and what I call be a little bit more realistic. Coming right on into this morning, this doji you see here is the jobs number that came out, which was favorable. So again, it's not necessarily the jobs number, but it's a new unemployment application number, which was obviously came in 100,000 less than what we were expecting. So starting to see some movement back down here to the red, and we'll see where we open. All right, as far as other news out that we can get off this TD Ameritrade chart, today's the 3rd. So some earnings that are out earlier this morning we'll talk about in the headlines. And then there's one big name, DocuSign is the one I wanted to kind of highlight after the market. So DocuSign and Zoom have been traveling together. Again, Zoom's the communications thing that we're on right now. So they were up 40% based off of earnings this week. I expect DocuSign to be on a similar trajectory. Again, they travel, I mean, their charts mirror images. So we'll see how DocuSign does. Again, after the market, I expect them to jump up. We shall see. If you were to take a trade like that, you would enter that right at the end of the day and then hold it over the night. That's not really what I do. I'll wait for it the next morning and see kind of how the action is. All right, we'll go back to the main screen there. Well, actually, we'll pull up this chart. This will be our chart for the day trading a little bit later in the presentation this morning. All right, let's go to CNBC.com. We'll take a look around the world on this Thursday morning. So here are the futures. So Dow's a little bit in the red. They were a lot in the red earlier, and again, touched the green after the jobless claims numbers. That was the word I was looking for earlier. And then the other two are pretty well in the red. You know, tech and the NASDAQ has really led this, the V-shaped recovery and, you know, brought the market higher. Well, could be taking a little breather now. And again, we could sell off 10%, 20% even in tech and not even be out of what I would call a normal scenario. So expect the volatility to increase going into the election. And that's what we're going to talk about a little bit later. Let's go around the world. Europe is in the green. So that's a little uncommon to see Europe trucking along green across the board and have the U.S. markets in the red. But again, we tend to be the dog and they're the tail there versus vice versa, unless there's some major news out of Europe. All right, as far as the Asian markets, pretty much split across the board. Here's our numbers from yesterday. Again, just kind of what I would call super optimistic, right? Every time I was had an appointment yesterday, I came back and basically all afternoon, it was just everything was screaming higher, except for Apple and Tesla, the split stocks, which are now selling off, which is the exact pattern that you will see. Everybody gets all excited around the split and then they sell off. So no worries there. I'm not even worried about it at all. Volatility, though, you look at the number, 2650 or so. If you're in the VXX, which is how I trade that, again, and almost everybody in the room is in the VXX that I have that has portfolios with me. So again, maybe even a major chunk. I'm holding that basically out till 30, which I think we will probably see by next week. And then I'll start trimming out of the volatility trade. Remember, volatility, when it spikes, it can go up to like 80, but then now you're into a market timing scenario. So I try to prefer to do it as an investment to where you just, I know it's going higher, wait for it to go higher, sell some or most of it, and then just hold the rest for a later exit. All right, bonds, let's take a look. Red across the board, nothing super significant though. Oil's been dropping. Remember, we were hung out around that 43 level for some time. Now we're retesting the 40 level, which is kind of that normalized level. So would really like to see that stabilize, especially going into the election. All right, as far as the precious metals out there, a little bit of a sell-off, but not a whole lot. And we'll come back around to the main screen and take a look at, refresh here real quick, and take a look at why Zuckerberg's face is right there on the leading headline. So this is kind of interesting. So banning political ads going into the election. Well, again, if you're a Facebook investor, which I am, that's how they make their money, is through ads. So that's kind of a whoa, if you will. So if you really look at this headline carefully, new political ads a week into the election. So they're not giving a whole lot of revenue, but what they are doing is telling folks a week prior to the election, have your orders in. So you can't basically, what I call, drop the bomb. And I know a little something about that. Days prior to the election, right? You have to be at least a week prior. So if you have something, the oh my gosh moment, like, hey, there's something weird on Trump's tax forms that you haven't been able to see for years, or whatever the one side thinks they have on the other, and they can't just drop that bomb like the day prior. They have to put it out like a week prior. So they still can run ads through the election. You just have to have it out there and set. So I don't know. It's kind of a nothing headline, to be honest. That's my interpretation. All right, let's see what else we have out there. The weekless jobless claims. All right, we have 881 was the number of people that filed for unemployment. We expected, I think, 950. So that is good news. Let's see what else we have. Ford was back in the news, making some job cuts and early retirements, volunteer things. So Ford trying to turn it around again. They cut their dividends, so it's not super attractive right now. But I do think there will be a day when Ford kind of comes back, especially if they focus their business model. Look at this right here. You know, we had this in as a short on one of the days this week. They kind of run together sometimes, as you can imagine. But what was the point? Yeah, it split Monday, went up to crazy levels, and then, of course, it's going to sell off. One of the news story from yesterday was, or last night, I think it was yesterday, was a major shareholder sold a bunch of positions, or sold a bunch of the holding. Well, guess what? Remember when I told you, whether it's in here in the podcast, that specifically when you have that one holding in your portfolio and it keeps increasing and outperforms the rest of the portfolio, there are times to trim. That means sell your racehorse, your thoroughbred, if you will. And that's largely because it's getting outsized in relation to your portfolio. I happen to use personally 25% of my portfolio is in Apple stock. And every time Apple goes up, I have to sell a little bit, right, to keep it within that 25% range. Well, when you have a stock like Tesla that's been up 1,000% in the past year, you run into the same problem. Now, I use 25%, so there's really a lot of leeway there. But if you're on this other professional investor, he had set a 5% limit in his particular portfolio for his hedge fund. Well, it had gone up to like 6.5%. So basically, he sold it down to 5%. So that's a ton of shares that went out on the open market for nothing more than financial discipline, portfolio management, the basics of it. So when I say there's a couple of podcasts out there, there's only one reason to buy an investment. You think it's going to go higher. There's all kinds of reasons to sell, and portfolio discipline is one of them. And that's what we saw this week. Now, Tesla has a huge downside. Literally, the stock price is, find it on another screen, with after the split now 447, that stock could literally go back to 100. I mean, that's how overpriced it is. I'm not saying it will. It's been a trail of tears, anybody trying to short that until recently. But 16% this week, it's off more than 5% this morning, and I think it'll be the top short of the day for me today for what I call. All right, IPO shares have been crushing it. That's not uncommon. There's times when you think there's times to take the whole market, and then there's times to pick stocks within the market. The recovery from COVID, from the March 23rd lows, has been largely individual stocks. So if you're in any of the 50 stocks that have crushed it since then your portfolio is in the green. If you're just take the market overall, then you're just now getting back to the green. So I didn't say that correctly. You would be back to the green a lot earlier if you had some of the thoroughbreds coming out of the recovery. Jeep Grand Wagoneer, $100,000. Good luck on finding somebody to pay that. I mean, people will, but you can get a lot different car for $100,000. Ford again. All right, Tom Seaver, childhood hero, passed away. 75 seems way too young. All right, that's it for the headline review. Let's go ahead and take a look at FinBiz super quick, which I don't have pulled up. So let me type that in here. So for our stocks of the day, we're talking about travel and leisure. These are the stocks that have been beat up. We'll put in AMC. 70% of the theaters are scheduled to open this weekend. You know that they went into the throes of bankruptcy. We were shorting into this back in the day. Back in here, actually, excuse me. Not here because we weren't open yet, but here back when we opened in June. Again, this was just the easiest short in the world. Day one short of the on time on target morning brief was one of these red bars. I can't remember. I think it was this one. But love has gone back into the name, as it appears we're not all going to die from COVID, and that actually normality may return. A lot of these regression lines you see in the back here, there's a little key over here for the moving averages. They're all about to turn to the positive, and you have reopening. So is the worst over? Probably. If you look down this column, if you can see the mouse there, a 30% short float, meaning 30% are betting against the stock. Those people are going to have to cover, which means there's buying. So really AMC is kind of a long here. Not my type of long because it is a value investment, but you could buy some AMC shares here. If you buy at 7, sell at 8. I mean, get out before it tries to get back to the new highs. But I do think people are going to flood back to the theaters. I think people are less scared of the virus every day. So you can do this if you want. Again, I don't think I'm going to hop in unless I get a little better entry price, like maybe down here at 6. We shall see. But yeah, I wanted to show you that they paid their dividend the whole time through this, which is uncommon for a company that's going into bankruptcy. But that is all I'll show you there. Let's switch over to the next platform, which is the Schwab Advisor Street Smart platform. So sharing that out right now. You can see AMC is the middle right box here that we're taking a look at, and then there's that recovery back up to 7. So right, taking some notes for some things we're going to take a look at. All right, upper left, we talk about American Airlines a little bit yesterday, and United. Look where these are. Obviously, somebody came out last night. It was United, I think, is going to furlough 16,000. So they've done the early retirements, they've done the buyouts, they've done the voluntary layoffs, and now it's all the way into the furlough. So that's going to hold the stock price down. So again, the thesis here is when there is a vaccine, which again, Fauci's talking about maybe by the end of the year. Some companies are talking November 1st. There's another side of this I hadn't thought about till this morning is, would you take the COVID-19 vaccine? And the person I read the article made a great point of no. It's not killing people. It's not killing people. It's in my particular demographic, I should say. So for me, at a 51-year-old that's in pretty good health, no, maybe not. I don't know. I hadn't thought about that. So instead of everybody going out and taking the vaccine, there could be a vaccine become available and people not rush out to take it. That would be an interesting turn. But either way, if we all get back into normality, if you will, you could get into American at 13, get into UAL 37. Again, these are at a fraction of where they were before. Cruise lines, obviously, you're sitting there on a little petri dish on a cruise liner. It's not like airliners. Airliners do have the big fancy systems that are out there that recycle the air, purify it and all that, and they always have had. You don't really get that on a cruise liner. AMC, again, we talked about a little bit earlier this morning. Nice pop out there, and again, we'll take a look at that for a long today. Where I would put my money is in the casinos, because people are people, and people love to throw their money away, which is kind of insane. But that's where I would step in. I don't really have a best of breed in the casinos. I like online gaming for DraftKings. You hear me talk about it all the time, but it's a pure go sit your butt inside the casino. Las Vegas Sands, MGM, Caesars. I would probably pick Caesars since they had their, we'll take a look at their chart. They have the merger with El Dorado. So they've recovered a little bit more than the rest. So if you're going pure value, get down here with Las Vegas Sands or MGM has further upside. There's Las Vegas. Caesars kind of already run up. But if you want to just go into the ETF, which is kind of a common way to just say, hey, I'll take the entire industry, PEJ is your travel and leisure ETF that you can take a look at. All right, let's switch out of our long-term trading mode. We will go into our short-term and take a look at some names that are in play. We've got Tesla gapping down. We have, trying to find my favorite headline here. And we have AMC moving up. We have Rocket moving down. There's what I'm looking for. So I'm clicking on this. This is probably pretty small, but we're going to take a look at what is moving up. Again, we look at 5 to 10% up or down, and we take it in that direction. So we have AMC. We have 5 is up 8%. That's 5 below. GWRE long is 4.7%. CONN. Don't know what that is unless that's Conn's Grocery, but not a whole lot gapping up big there. Let's look at the negatives. PD, we know about Tesla's gapping down. PD's down 24%. DBI, I don't know what they are. is 19%. CrowdStrike, again, is the software as a service. They've been on fire. They've also been selling off, so they're kind of more of a continuation play to the downside. They're off 9%. CN, 8%. Ambarella is a name we used to talk about a lot. UPS is gapping down just slightly, did 1%. FedEx is on the move up. So again, FedEx I like is best of breed in that space. So we'll take a look at those names very quickly. So the next layout you're going to look at, we'll have a graph on the left. We're looking at a gap of 5 to 10% and 100,000 in shares. So we'll look at the upside first, see what we're getting out of AMC this morning. Again, this is AMC Entertainment, plenty of volume, actually gapping down a little bit. So we're going to draw a line through that. 5 is 5 below. They are gapping up 8%. A little light on volume, 117 up to 127. So they closed here. And let's zoom out just a little bit. So again, part of the retail recovery, gapping up to 127 on strong results. That's what you're going to see here. So that's set up kind of beautifully. We have to wait late entry just due to the volume. Again, that's so you can get in and out of it quickly. GWRE, I don't know what that is. Let's take a look. Guidewire software, low volume, can't really do that. CONN. Cons, it is the grocery store, 23,000 in volume, so that's kind of light. $13 move up though. Nice move up out of a grocery store. Again, the grocery stores have done well. Let's see, beats earnings, so misses on revenue, but does beat earnings. So that means they're doing internal cost controls, that sort of thing. We'll take a look at that. So that's okay, but low volume. Again, low vol. FedEx, see if it's getting a gap up at all. This was a headline, 227, 229, so not much of a move up. And then STRO, another name I picked up. Biopharma, if you're going to take this again, 11.2 up to 12.25 on good news and low volume. So we got 3 to the long side. They're all low volume, so we will have to wait on an entry for those. On the down 5 minutes to the open, on the downside, let's pull up Tesla first. See how we're doing. So 3 million shares pre-market, gapping down. That's what's that, 8% on the gap down there. See if we can tease it out of the decliners here. There it is. So 8.2%. Ooh, Zoom on the way down too. Let's take a look at that. Zoom minus 5%. All right, so Tesla, when you look at the chart and back it out, again, this is all split adjusted. This was what? This was Monday. Excuse me. This is a huge move up Monday. There's your split all the way up here and then selling off basically all the way into below 400. I think it has room to the downside. So we'll all be looking at that first for the short. RKT, again, is a rocket. Gapping down. See some headlines there. Basically, it's run up from the IPO and just kind of coming back in a little bit. Plenty of volume, so that also qualifies. We'll keep an eye on that. PD, PagerDuty, gapping down significantly. What's that, 24% from 39 down to 27. Outlook's disappointing. So again, it was an earnings miss. Wow, that has really gapped down. We'll certainly cycle back to that and keep an eye on it. It's gone too far, I think, as far as to be able to get another 3R out of it. DBI, Designer Brands, a little low volume. They're gapping down as well on an earnings miss. I don't think I'm going to take that. CrowdStrike. And this is a continuation. They were up at 157. They closed at 142. Down to 127 now. This name does have a lot further to fall. Trying to see if there's a specific headline on Crowd or if it's just a continuation. Looks like a continuation, but has more room to come in. I like the name long though, so I probably won't take it, but we'll watch it. All right, Sienna Corp. has the volume, is gapping down. What's that? A little over 10%. They beat, they must have guided down. 60 down to 50. Boy, the bottom fell out of that thing. I'm not going to touch that. Keep an eye on it. UPS was off a little bit. We'll pull that, and then we'll get our chart set up. So not much of a move down in UPS, and then Zoom was our last one. ZM went up 40%, so this is, again, just pulling in. A lot of folks will take again, there's your 40% move on the earnings. This would be just a sell-off kind of play. So not really interested in that myself, so let's take a look out to the TD Ameritrade screen where we'll set up our trades. All right, on the left we have the SPY on a 1 minute, then we're going to put in Tesla short as a continuation short. We'll put in RKT as a sell-off short as well, and then let's take a look at our one long. Boy, 5 below. We'll put CrowdStrike. We'll put 3 shorts across the top, and then we'll see. Oh man, that just popped up. I'm not going to touch that. We'll put that 5 in, FIVE. As far as, so it'll be short, short, long across the board. So as we're taking a look into, so again, we'll have zoomed in over here at the open to watch that Tesla. Again, it'll be a short, went all the way down to 406, popping back up. It's got plenty of volume. Ideally, we would like to see this come back up to the 419 range and then short it all the way back to 400. We'll see if we get that. I don't know if we will or not. Rocket congestion here from 27 to, we got to wait for some volume in Rocket as well. Nope, we don't have to wait for the volume. We got plenty. We'll probably take a look at Rocket right away, especially with this move down in Tesla. And then 5 below will be our last choice. Again, that'll be going higher. We'll actually zoom back out. So, all right, so 30 seconds to the market open. So here's our plays of the day. You see 4 screens out there. This is the TD Ameritrade ThinkPipes platform. All the way on the left, we have the SPY, and I'm refreshing on another screen to see where the market is when it back to open. SPY's down 0.5%. Everything's in a red across the board, and Tesla's dropping is the big headline. So here's our Tesla. This is a short. So again, looking at probably a $5 price stop on this, and then we're looking at Rocket short for about about 40-cent stop, and then we've got 5 below going long. So here's the opening bell. It just opened. There is Tesla falling like a rock. Obviously, we're not going to hop in this unless we can get it to actually come back up to around, we need it back up higher than 415 to even think about shorting into this. And again, what takes it higher when you're looking at a short? It's short covering. So there's people that shorted this last night that are now just simply covering. So we would need Tesla to kind of come back up in here. So second one we have Rocket Mortgage. It's already down 10% on the day. And boy, talk about the bottom falling out of it while I'm looking at it. That's 50-cent move while I touch the arrow there. So again, we would need to back that up. If it would need to basically back above where it opened to be able to take it. And I don't think we're going to. Somebody's dumping this out here. So, all right, things in play. Good news out of the market. That's a good sign. Tesla is coming back up to where I said we would need it up around the, I'm going to back out of that, see what I want. I said we wanted to back up around the 418 range to be able to take it. Again, that would be short covering. So it looks like it might make it. So we're going to get, looks like we're going to get an entry here. So it needs to get above the 418 level, and then it's going to be a $4 stop if we can get it up there. If it gets up there, we're not in the trade yet. We need it to recover some more. Rocket's recovering. We would need that above 2810, basically clear the entire open before we could turn around and take it. So there's our 418 above. We're not in it yet. We're just saying now is where we're looking at getting in this. Let's say 416 will be our entry, and then 420 will be our stop. So again, 416, this will be short on Tesla. We'll need that red bar to come right back into it and tag it, which it looks like it's going to. There's our 416 entry. 420 is our stop. I'm going to draw the down arrow so there's no confusion on which way we're taking Tesla, because Tesla can be confusing sometimes. All right, so there's your down arrow, poorly drawn. We're clearing that congestion with our other stop up here at 420. Okay, so it's a $4 stop. So our price targets are 412 is where we want it to go. That would be 1R. So whatever your risk unit is, that'd be the first level. 408 would be the second level. And then down at the bottom would be 404 would be the third level. That's where we'd be looking to, didn't mean to draw. It's going to look like a Z in here now. It's not meant to be a Z. It's just poorly drawn. So there's the second R level, and then this is the third R level down at 404. So good entry. I like that. We took it right where I wanted to, as I was talking about. So we'll see. Market's kind of helping us out, selling off down here. Let's transition. So we're in this trade here. We're short on Tesla. As you can see by the arrow, 416 was the entry. You could take it in here if you wanted to, but you still got to honor that 420 stop. It's got to be above the high of the day. So if the market sells off all day, Tesla won't be above 420 all day. All right. Ooh, this is kind of a good entry here too. I have to do some quick math on where we would want to enter this. It'd be 28.2 to the downside and a 60-cent stop. Could I do that? No, let's go 28.3, 50-cent stop. This is going to be a short on Rocket. And I'm not all excited. I'm not going to take that trade. I'll call it if you want to take it, but I'm not going to take it personally. I don't like how it's set up. No, disregard Rocket. Five Below is already up 10%. So let's take a look at some other names out there that we said we would. We'll look short first. So there was PD. So again, we're in the trade on Tesla. Rocket's there. I'm not going to take it. And on the right-hand screen, we're going to surf around a little bit. So PD was a short. It was selling off 25%. Largely not moving to the downside. So don't need to come back to that. DBI down 20% off of earnings. You can see the little red phone there. So again, already moved down 20%. That's what we would like, our 5 to 10% to the downside. Tough to sell off more if you're already down 20%. All right, CrowdStrike, let's watch that. I do have this long, so I don't get all excited about shorting into something that I have long. Was down 10%, backed up nicely. I think this thing will just continue higher and probably be a fill the gap, so we're not going to worry about that. All right, looking over at the market selling off a little bit. That's nice as far as our short, and the market needs to take a breather anyway. Nasdaq's down 1.7%, so there's going to be a little bit of blood in the market today, it looks like. All right, what other name other than CrowdStrike do we look at? Short, let's look at Zoom. Again, this is a continuation sell-off. Not too bad. Down 4 or 5% for the day and retracing it. So that was kind of it that I had for the shorts. So Rocket hadn't worked yet. This is actually kind of a pretty entry. When you look at the short covering back up here, then these are dojis sticking up, meaning he keeps trying to go higher, can't, trying to go higher and can't. So if you're going to take this, I'm not going to take this. 28.2 is your entry. So if you get that big red stripe down to 28.2, I'll just draw that so you don't have to try to remember what I'm saying. That would be your entry point. And again, you would be taking that down if you wanted it. So we'll get that drawn here. That would be the entry into terrible drawing. That would be your entry into Rocket short at 28. If you wanted it again, you'd have to go 50% stop all the way up here. I'm not in it. All right, Tesla's backing up on us. So, hey, if it hits 420, you're out. Just be true to your discipline. All right, looking at Zoom long. It's looking good. Some other longs out there. Let's see, we had 5 below. So we'll put 5 back in there, see how 5's doing. Selling off a little bit. So not uncommon for a discount retailer. GWRE. Basically $120, $4, yeah, $3.50 move down. That's not good. So that is not holding. They are even red on the day. Cons, again, CONN. It was up at 1450 down to 1412, selling off again. Still green on the day, up at 3%. So Not something I'm interested to see how FedEx is doing. You know, I think FedEx is best of breed. They're selling off. So they were up at, opened at 228 down to a couple bucks. So not a real big deal, 0.5%. And then STRO was down 17% pre-market, and excuse me, up 17% pre-market, and has gone higher. And again, that's a biopharmaceutical name, so tough to get a good entry in this. Okay, that exhausts my list of things we're going to look at. We're in this trade, and maybe we're going to get knocked out. There, we're out. So Tesla trade did not work. We'll be down an R on the day, and that's all the trading we're going to do. If I can get the mouse to drop this, stop it, drop it. It's not, there we go. So we're out of that Tesla trade again. I'm over life on shorting Tesla. And if you were in the secondary trade, we didn't take it, but again, Rocket would be short here. So zoom out on how the market's doing overall. We're 8 minutes into the day. So a lot of congestion at where we are. And again, the Qs are the ones that are off. So we don't put the Qs here very often, but you can kind of see this is what's going on in the Qs, down 1.78%. So again, this is the NASDAQ there. So go back to SPY, so we have it all set up for tomorrow. All right, let's go ahead and take a look over at the bigger names that are out there. So this is where we're switching back to the long-term investing. Again, you have the SPY chart here, and we're really looking off to the left and seeing what is in play. Northwest Bio up 15%. They've been on a tear, but they're below $1. So not for everybody as far as being a penny stock. Banks are up. That's kind of nice. Airlines up. That's Delta. This is Love is Southwest. Prudential's up. So kind of some vanilla name, value names out here. Coke, CVS Pharmacy. There's ExxonMobil getting a little bit of love. Again, just got kicked out of the Dow. Realty Income, nice staple hold for long-term folks looking for some investment income. They pay out monthly. It's kind of nice. AT&T's never in the green, it seems. So yeah, so kind of some old school names in there. Let's see what's in the red. You'd expect a lot of big tech names, right? So you got Tesla down 5%, Palo Alto Networks, Trade Desk, PayPal, Neo, Twitter, FireEye, Nikola, Salesforce.com now in the Dow. 10-cent holding. So Apple down a couple percent. So what you're really seeing out there is, again, that retracement in technology. So when you look at the Qs from a 5-day, that's all you're looking at is, we could sell off. So this is what, a 1.7%. So look at this chart with me, and then we'll switch to our question today. So this is 1.7% from the close to where we are now. We could drop another 1.7, so that'd be 3.4. We could drop basically 4% today, and guess what? We've gone back a week in time. So that's how far we've run up. So don't get excited about a big red day. We've been kind of overdue for one as well. All right, go ahead and put the trading charts up there for a second while I get set up for our question of the day, which again is on volatility. Hey, let's look at the VIX while we're here. Get rid of Estro and VXX. I've been calling this long, should be up today. 2 X's, not 3. So it's up a little. I said I'm going to hold this till basically 30. I'm going to show you that chart looks ugly when you say, oh, you should take that long. Here, look at that chart. This is what we're talking about. And again, if you can go any further, it was down to like 22. Made a liar of me. 23 changed here. So this is what I've been talking about. And for those that have been in the name for a bit, that's the move. And again, it's got up to above 30 somewhere prior to the election. So that's what I have as my alert. I don't really care what it does here in the 28s and come back down to 24 for all I care. I know it's sometime prior to the election, it's going to spike to 30 or above, and I'm going to move out at that point. All right, so that's enough on that. I'm going to share a screen down to, this is Investopedia, and this will close out for the day on our VIX discussion. Okay, so there we are. Here's our Investopedia volatility definition. So statistical measure. So a computer cranks this out. This does not trade on the open market. VXX, which I just showed you, trades on the open market. So there can be some confusion there. They're like, let's go long the VIX. Well, you can't just put in the ticker VIX and go long it because it's math. It's not open market. So you have to go to the ETF, which is VXX, which again replicates it, but it's open market. So remember, in open market, people can be as stupid as they want to be. It's not a statistical measure, which the VIX is an actual statistical measure. So they may not travel one for one, depending on emotion and several other things out there. So standard deviation and variance. Here's your key takeaways. Large and assets price swing around the mean price, statistical measure of its dispersions of returns. So depending on how much stat you've had, I've had 3 when I did my coursework for my PhD, had to take in finance 3 PhD level stat classes. So I'm qualified to talk on this, and I'm telling you, it's completely painful, but it is important to understand. When I'm saying if the market sold off 4% today, it takes us back a week. That's all reversion to the mean. That is nothing other than statistical variation getting priced back in the market. That's it. So people get excited about, oh, I just lost, if you have a $1 million portfolio and it drops 4%, well, that's $40,000. And somebody will get excited about that without thinking they just made, $40,000 in the past 5 days. So obviously you can't make that kind of money, and for it to stay, it needs to, average out over time or dampen down, if you will. So pricing models, beta coefficients. The one that I'm talking about is specifically the VIX. So here you want to get in and nerd it out on your stats for the morning. You can go to this page and do this on your own time. I won't kill you with it. But if you want to learn stats, you can make a lot of money in the world because of a lot of people don't understand it. So we'll click on this. The VIX is exactly what I'm talking about. When we look every morning, we come back to how's yesterday's stock market returns, and then how is the VIX, which again, stock market decreases, VIX tends to increase. So fear gauge, fear index, you'll hear that. That's more CNBC kind of slang, if you will. Real-time market index representing the market's expectations for volatility over the coming 30 days. So you're like, well, Steve, I hear you talk about volatility going into the election. Well, the election isn't within 30 days. It's within, 60 plus now, but it's still within, let's see, September, what do we have? October, November. So 60 days, right? Ish, or exactly. So am I early? Well, when you look at investing, you want to anticipate the anticipations of others. So I want to be ahead in this trade. You'd rather be 3 hours early in investing than 3 minutes late is generally what the phrase that's going through here. So that's what we have here. Measuring levels of risk. It's actually a big options calculation of who's selling and buying all kinds of options out there. So here you can see how it works. Get into that if you like. So that's really all I have for you today. So coming back around to how's the market doing overall. Dow in the green, just barely. We did see a move up there in the Dow a little bit, but you have the NASDAQ down off 2%, and then the S&P down 1%. So, and there's your VIX gauge that we're talking about going up. So that's all I have for you today. So thanks you so much for listening in, and we will catch you guys tomorrow for Friday. Have a good one.